Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Thursday, the 12th of May. Starting off with Agro Asian Mining, where we've had a really strong key reversal to the upside for yesterday's session, bouncing off the 8 pence zone 10-day moving average, also testing old 8 pence resistance as new support from October. The view at the moment is that while there's no end-of-day close back below the initial May peak at 9.5 pence, we could head as high as the top of this rising trend channel from the beginning of last year at 14 pence. In the meantime, any dips back towards, say, 10 or 9.5 intraday regarded as a buying opportunity, only back below 8 pence really, up delaying or even ruining the upside scenario. Next up, a stock which is controversial for some, I suppose, African Potash. Here we've got this the wind down from that peak last September, the double top through 3.5 pence, gap down through support, February support 1.15 pence, obviously quite a big negative there technically. The hope now though is that we'll have support coming in what was former resistance around the 0.5 pence area before the big break to the upside there was in August. Unbelievable the shares have gone back that far, but anyway, that's the way it is. Now we're looking for at least an end of day close above the 10-day moving average to flag that we are looking at a potential recovery situation. 0.59 is a 10-day line. The other level to notice and area to notice is 0.55, which was the April low. We need to have a few decent closes above that to sort of underline the bottom fishing argument. Bit of an RSI support line here from February as well, so that is a possible source of bullish divergence there, but still rather early days overall on the bottom fishing idea. But there is a bona fide reason on a technical basis to be thinking of the 0.5 pence zone as an accumulation area. Next up, a stock which has also been on the back foot, let's say, over the recent past. Horrible looking chart here, and shares still sort of on the oversold, in the oversold area. Arian Silver, basically, we needs to break back above at least that last April support 1.01 pence to give us a bear trap technical signal, and that would then target the 50-day moving average at 1.17 pence. But at least the stock is oversold, and at least it seems to have seen this support line there from the end of last year, or when, well, the end of last year, in fact, that's what we're looking at, December. So possible bottom fishing area, but obviously very early days there at the moment. Next up, BNR, Blenheim Natural Resources. Another possible support, stock finding support here. You can draw the line, probably just a bit lower than that, from December. So it's a broadening triangle, floor of the triangle heading towards 0.6 pence, and while we're above that, we've got a chance of a run up back towards late April resistance, 0.85 or even 0.9 pence over the rest of May. Slight hint also of an RSI support line here from the beginning of the year, off which the oscillator has bounced. Next up, a stock which looked very promising and then gave the bulls a bit of a slap in the face. That was the decline on the 6th of May. But what was interesting about that is that one, it was a bear trap from below the initial April support, 3.75 pence. I think the low then was around 3.5. It was also a floor which came in well above the 200-day moving average at 3.13 pence. That is a positive signal. Well, it was a positive signal. There's also a hammer candle there after that on the 7th, rather on the 9th. And also we've got this support line from November. So on a net basis, back in the bull or the recovery track here, end of day close above 6 or 6.1 pence should be enough to take the shares on to an initial target of 8 and a best case scenario target at that upper resistance line there, heading for 11 pence. But the best stop loss at this stage, probably an end of day close back below the 50-day moving average at 4.64 pence. Scott Gold is next, and here we've got a situation where there's been the big breakout, decent breakout there through the initial May resistance of 0.9 pence. Above that, looking for 1.35 pence at the top of a rising trend channel from the beginning of last year. If you're a great fan of the stock and you want to cheer yourself up, best case scenario target here is the upper parallel there that I've drawn from last year. That's heading towards just shy of 2 pence. Stop loss back below 0.9, maybe 0.8 pence, just to be on the safe side. Next up, a stock which I haven't looked at before is Sylvania Platinum. Looks like we've got the beginnings of a turnaround here. Nice RSI divergence and uptrend line there in the RSI window, and good consolidation along this support line there from last month, multi-tested. Probably an end-of-day close above the 50-day moving average is what we'd like to see again, perhaps even 7 pence. That would be the former April resistance. So let's say an end-of-day close above 7 pence and above the 50-day line at 6.78 pence, pointing towards 8.5 pence at the top of the 2016 price channel. Last up, a stock which saw was in the news yesterday, Vast Resources. Nearly there as far as the recent basing is concerned. What was helpful here is this gap through the 10-day moving average at the beginning of last month. That could be the sign that people are back in the stock, and all we need really as a confirmation would be an end-of-day close above the 50-day moving average, just around or just above current levels. 0.38 pence should do the trick. As you can see, the shares haven't been above the 50-day line in a meaningful way since September last year, so that would be quite a breakthrough. We've got the backing also of an uptrend line in the RSI window, and that should be a leading indicator on upside. First target towards March's resistance around 0.6 pence. That's it from me. More updates at the same time tomorrow.